Hello, everyone. Welcome back to the investing channel. Over the last few weeks, interesting things are happening with Nike stock. I want to spend some time to talk about it today. I'm not sure if you guys have seen, but both Nike CEO as well as Tim Cook, they have recently been buying quite a large number of Nike shares. President Trump also is doing a policy change in credit card rates. So, did they know about this? Is there some kind of first-hand information? Or is this just a coincidence? In my view, there is no conspiracy, there is no secret information. But what's more important is the timing of this, right? Because policy signals insider behavior, and when consumer conditions line up like this, it's often telling us where the possible price action of Nike will be over the next few years. Okay. So I was just looking at Nike stock earlier this evening, and wow, it's been such a long time since I've studied this stock, and I didn't even realize that it has declined so much over the last few years. I think it was initially trading at like what 160 and 170 in 2022. Now it's just trading at 65, right? So this stock has been really hit hard over the last few years. Okay, and when I looked at the post made by President Donald Trump on Truth Social, this was an interesting one to me because he is saying that the American public are currently being ripped off by high credit card rates of 20%, 30%, or even higher. And from 20th January, he is calling for a 1 year cap on credit card rates to 10%. Okay, whether this policy passes or not is beside the point, but what here is the connection towards Nike, right? How does this connect to Nike, right? What is the impact to Nike stock? And that's where I wanted to spend a bit of time on. Right. So why is Trump's credit card shock possibly positive for Nike, right? So this is where you need to understand about credit cards. Okay, so you think about credit cards. Credit cards, they are acting like a tax on consumer. When interest rates are high, 20%, 25%, 30%, a large part of a household income is going towards all these interest payments. It's not going towards spending. So as an individual or as a household, you are constantly under high financial stress. People they don't stop buying everything, they still need to buy necessities, but their buying pattern and their buying behavior definitely changes, right? When financial pressure is high, consumers they don't cut spending immediately, but they do a couple of things, right? Firstly, they will delay their replacement purchases. So imagine as a apparel and fashion product, your shoes you will tend to wear it longer, your t-shirts, your jackets, you will replace it lesser, right? Secondly, what consumers will also do is they might trade down. Instead of buying a trusted brand like Nike, for example, they might go to cheaper alternatives outside in the market. And also, as a consumer, they become more and more promotion dependent, right? They're very attracted to large discounts, right? Sales, markdowns, right? And this is the environment that's hurting Nike and even as a matter of fact, all these retail products. Okay, because it's not because people they suddenly hate Nike, they don't like Nike, but it's because of this financial stress that changes their behavior. Now, if President Trump's policy gets passed, here's the important part, right? Because interest pressure starts to ease. As a consumer, it doesn't mean that once this interest pressure is easing, you start to go on the spending spree. But what's happening is that, there's a bit of a more change in the buying behavior. People will stop delaying their replacements. They will stop trading down as aggressively as not as they've been used to, and they stop waiting for heavy discounts, right? And this is crucial for Nike as a business, right? Because this small behavior shift is very huge for companies like Nike. And the advantage is that Nike is sitting in a sweet spot. It is a discretionary product. It's not like a luxury good like Louis Vuitton, for example. And it's replacement driven, right? Your shoes will still wear out, for example, when you wear them for a extended period of time. Also, it's brand, right? It has high brand power. Most of people know Nike. And people don't buy Nike shoes because they want to show off their wealth, right? They are buying them because they trust the brand, they trust the quality, they're familiar with the product, they've used the brand before. And when these consumers feel less financially constrained, it doesn't necessarily mean that they need to upgrade to luxury products, right? They simply choose Nike product instead of any generic products out there. Okay, and for Nike, this is what exactly it needs, right? It needs better sell through, better inventory turnover, and less markdown, less discountings for them in their outlet stores, and the ability to price their products. Okay, Nike doesn't need more demand; it needs better quality demand. And if you look at the recent news around Nike over the last few years, their recent challenge wasn't really about demand disappearing completely. It was having high inventory buildups, a lot of discounting that was needed, uneven sell through. So having this more stable consumer environment will help Nike in the long run. It will help them to reduce promotions, normalize their inventory, and slowly rebuild the margin. And this is where you see insiders like Tim Cook and Elliot Hill. They have been buying millions of stock in Nike over the last few weeks. Right? It doesn't necessarily mean that they knew about this policy, but what is more important is that they are very confident in Nike's performance in the medium to long term. And that's what you need as an investor, right? If the CEO is buying, it signals that there's confidence, right? Because CEOs buy when they feel that the downside risk is limited, conditions are no longer getting worse, and maybe the worst scenarios have already been priced in. And one of the very famous quote by Peter Lynch is that he mentioned that insiders they sell for many reasons, right? Whether they want to buy a yacht, they want to donate to charity, but insiders only buy for one reason. They believe the price will rise. Okay, the price doesn't have to rise today, tomorrow, next month, but over the long term, the price will rise. The price right now is undervalued. And as a long-term investor, that mindset is what exactly we need. I didn't have time to do a in like really deep dive on the economic mode and the financials of the business, but I quickly looked at Moomoo and looked at the Morningstar research. They gave a economic mode of white, which is very important for me, right? A strong and white economic mode allows Nike to defend itself against competitors. And based on the valuation that um, this analyst did, estimating the fair value slash intrinsic value at $102. Again, this is not financial advice. You must make sure to do your own due diligence, understand the risk that's involved, right? Okay, because Nike still needs to execute, right? If it doesn't execute well, if it doesn't turn around, even if there's this policy change, it might not necessarily bring about a meaningful impact for Nike. But at least let's be clear, right? The policy may not pass, Nike still has execution risk, but to me, the story makes sense. Okay. So ending off this video, again, a friendly disclaimer, this channel is for education and sharing purposes only. I'm not giving any financial advice or investment recommendations. Please invest responsibly. Do your own research. And if you like this kind of videos, do help me to like and subscribe because it will help to grow the channel a lot. Thank you and have a great weekend.